Hey everyone, I'm back with a quick breakdown of what just happened in the financial world, and trust me, this is something you don't want to miss. Treasury yields just took a nosedive after a July jobs report that left everyone, including Wall Street, absolutely stunned. So what's the big deal? Let's dive in. Alright, let's start with the basics. The July jobs report came in way weaker than expected. Only 73,000 new jobs were added, which is a huge miss compared to the 100,000 plus that experts had predicted. And if that wasn't enough, the numbers from May and June were also revised downward. So the job market was already on shaky ground before this report even dropped. Investors instantly got spooked, thinking, wait, is the economy slowing down more than we thought? Now, here's where it gets interesting. When people get nervous about the economy, they look for safe places to park their money, and that's exactly why Treasury yields fell so hard. The yield on the 2-year note dropped to 3.747%, and the 10-year went down to 4.245%. Remember, when yields fall, it means folks are piling into bonds. It's classic flight to safety mode. Everyone's playing defense right now. Stocks? They didn't take the news too well either. Dow, S&P 500, NASDAQ, all the futures dropped more than 1%. Not just here in the US, even markets in Europe and Asia felt the sting. And it didn't stop there. The US dollar index slipped, Bitcoin got knocked down, and even crude oil stayed pretty much flat. It's like a ripple effect across every major market. So what does this all mean for the big picture? Well, now everybody's looking straight at the Federal Reserve. With job growth tanking, there's a lot more chatter about a possible interest rate cut, and some experts think it could happen as soon as September. The Fed usually cuts rates to boost spending and borrowing when the economy looks shaky, so everyone's listening for any hint of what they'll do next. But wait, there's more. President Trump just announced that tariffs on certain goods will jump from 10% to 41% on August 7th. That's throwing even more uncertainty into the mix. Trade tensions plus a weak job market? Not an easy combo for businesses or consumers to handle. Bottom line, the US economy is at a crossroads. Weak job growth, wild market swings, and trade drama are all piling up, and nobody knows exactly what's coming next. If you want to stay in the loop on all things finance, don't forget to hit that subscribe button for #America, smash the like, and share this video with someone who needs to know what's really going on behind the headlines. Thanks for watching, and I'll see you in the next update.